Stavros Tousios for M4Markets. Today we're going to close the week with the US dollar against the yen following the BOJ decision, and also US oil because we are at a critical junction. So let me just remind you, dollar against the yen, we have been on a descending trend which we recently broke outside from, and what's happened is that we've come down and retested this channel twice, and since or recently we bounced and broke above the 135.17. This is a significant development given the fact that we've actually gone into overbought territories, which means momentum is on a breakout mode as well. So this could initiate a move all the way up to the previous stop at 137.93, 138, let's call it, and perhaps even higher for a retest of this ascending channel. If we do see a retest of this ascending channel, this could, of course, mean that we could continue higher and breaking above that level. If we fail to reach that channel and we stop at or below the 138, then most probably it's going to be a case where momentum is going to start slowing down. We're either going to see a pullback or a full-blown reversal. But for now, we are focusing on the fact that we have seen a very nice rejection down here and we're moving higher up. So we have to see from a close-up perspective where we could be heading. Look, this is the 200 Fibonacci extension. And that typically, of course, means, because it's quite extended a lot, that this is an impulse. An impulse is coming in 5 waves. So this is probably the 1 and the 2. And this is the 3. So the 4 is expected to see a pullback, unless if it just continues going up higher and does the 2.618 Fibonacci extension. We do not know how likely are they to extend, especially since there's no signals on the RSI or any other indicator. We do know that we are overbought, however. But in this case, don't get this confused. We're not in a sideways market, and the RSI shows that there is a lot of momentum coming in. So maybe we're going to get a pullback and a move up to 136. Maybe we'll go straight to 136.40 and then get a pullback. And from there we go up to around 137.50 or so. Now, when it comes to oil, we've also called this potential pullback. It's actually turning to be a little bit more deep. So this is kind of telling us that this is the end of the first 5-wave move to the upside. And now there is one thing that remains to be seen, of course. Look, we have broken outside this channel and retested the channel as well to the downside in this case, which is the opposite direction, of course, where the USDJPY is heading or what it's doing, especially if we take into account the rejection of the channels. Now, look, typically corrections have same lengths. Okay, so you got this correction, a correction within the correction, and the second one. The sale length would mean that with 100 Fibonacci extension will brings us down to around 72.30. This is above the 61.8 Fibonacci golden ratio. However, it's below the 50%. And below the 50%, it means that bias or sentiment is actually changing to the downside. So we're going to have to play that as a range between 76.25 and 71.65. This has to be a range. We're going to be short and biased up as long as we are above the 50, which we have actually retested, and a double bottom over here recently. And if we cross below, we're going to treat the 61.8, which is also the previous swing high over here, as the bottom of this range. Okay, don't forget that typically the corrections in this particular case are between 38 and 62 anyway. Okay, depending on what sort of wave this is, what type of wave. Is it a full correction or is it a new impulse to the upside? Because having 5 waves doesn't necessarily mean we're going to continue higher in multiple waves, but maybe just one more. So we're going to go down and zoom in a little bit on the 1 hour to see if we have anything different to give us a potential signal over here. As you can see, on the hourly chart, from the low to the low over here, you have a low to a higher low. And this is an actual divergence. But we also have to pay attention to how this move to the upside is printing. And currently, it's printing on a corrective fashion rather than anything else. And as we did say before, let's not forget, the 100% Fibonacci is around the 72, 73 territory. So there might be one leg to the downside, perhaps even down to 61.8 before we see a decent bounce to the upside or a full-blown reversal to the upside, which of course would mean that we're going to break 79.12 and the 80 and go and reclaim control of the 83